Thank you, Scott. Hello, Andy.
Hello, Steve. Hello, Scott.
Hey,
All right. Everybody's mic is working. Great. So, welcome to the February 21st trade of the week. This is the one webinar a week on Tuesdays at 5 p.m. Eastern where we get together and talk a little bit about the focal point of the past trade of the week, how we selected it, why we selected it, maybe some of the other short list ones that we had on there. We'll show those again today, but give some ideas as to levels of interest, profit targets, and downside risk. But that never fully takes up the full hour. There's lots more to talk about. But before we get to it, the traditional disclaimer that you guys always hear us say, same old, same old. We are not registered investment advisors. We're not here giving out financial advice. If you are seeking financial investment retirement advice, you got to go to the people who took the tests and got the series licenses, the brokers and the registered investment advisors. They are the ones that can give you sound financial advice. What we're doing is just showing you some cool technology. We're a software as a service provider, subscribe service, and anything you see on here should not be construed as investment advice. These are just ideas, and let's get to it. Okay. Always take a moment for the new people, especially on this slide, that you're not alone with trade ideas. Our customer support and onboarding, I think, is unmatched in this industry. We're growing by leaps and bounds. I'll show you a chart there in a second. So we're constantly adding to our support staff. But basically, we have 4 webinars a week, one of which is this one you're listening to now. We have the live trading room, which is the big window here on the right. This is Barry Anderson's room. There's anywhere from 400 to 600 people in there on a daily basis watching Barry's desktop as he uses trade ideas and is very, very active in engaging back and forth with the chat window, the live trading room as it's called. A lot of good support in there, as well as even a technical support tab that you can click on and get some really good immediate help from other users if it's a basic question. So wonderful hand-holding throughout the day, every day, Monday through Friday, live market. The live trading room is free. If you're not in there, there's really no excuse because, like we said, it's free, and a lot of people really enjoy that, even over some other paid subscription rooms that are out there. And lastly, that's not on here, but if you do subscribe just to 1 month or longer, you are able to reserve a 1-hour time with one of us where we deal directly with you one-on-one and give you custom support. Find out what it is you're looking for and get you going in the right directions, maybe help you with a layout, answer some questions, share a couple of scans that you may have seen, maybe be interested in, but it's a great way to really get started because there's nobody else involved. It's just one-on-one, and we can really custom tailor that hour to whatever it is you want to look for, longer term type stuff or short momentum type stuff, or just get a bunch of questions answered. So all of that stuff I've just talked about is really a great way to quickly try to get people up to speed on our very sophisticated software. As promised, our subscriber growth was updated as we last saw a couple months. We haven't updated it. We had a little bit of a pullback, kind of like a regular stock would do on a breath, and then a nice shoot higher as the word continues to get out about our technology and also Holly the AI. That was notated right there for the most part to kind of really show the parabolic growth kind of kicking in. So we are just pleased and proud as can be to be a part of this, and we realize that people are really starting to get it. The word's getting out. And then just a quick graph on the AI performance going back to this year, January 1st, so 45 or 50 days or so. The green line, again, is the AI pulling away from the blue line, which is the SPY ETF on a total trade aggregate basis. So once again, new fresh year, new fresh data continues to show the separation of why we believe the AI really is in the business of just basically giving us casino-type odds. You know, over the long term, the casino odds are showing up in the alerts that Holly's spitting out. So another nice graphical representation there. The agenda for today, we'll go through the market recap, and I want to stop on IWM a little bit and highlight some stuff there. We'll go through the AI recap today. Got up to a slow start and finished rather strong. The trade of the week, as you saw, was JSO, and we'll even maybe catch up with last week's trade of the week, Weight Watchers. It hasn't been doing much, but I've got some additions I might want to make and some discussions and talk about that. Our web version, which really we don't ever use on the webinar here, is coming together nicely. We've had some new improvements and some new releases, so we're going to take a few minutes and go and launch the web version for people who are not aware that we have a web version, and talk about some of the basics and the way to do some of the things and get the data that we want on the web version. And then I do have a couple of possible price alerts. Well, I've got about 4 for the most part that I can share with you guys at the end. And let's just save that for later. All right, so what you're looking at here is my default layout of trade ideas. This is the layout that I prefer to work with. Most of my windows are visible. A couple of windows might not be. They might be minimized, but not to be confused over here with these channel bars. When we click into these channel bars, everything on here leaves because my default layout disappears and we go into channel bar world, where people can go to a pre-market channel and look at stuff gapping up or down, or maybe go to the new Alpha Predator channel and see what some of the high Momo low float stocks are doing. But I prefer to stay off the channels. There's a couple of things I've borrowed from the channels very easily. You just click into the channel and then right click any one of those channel alert windows and you can save those to your cloud. And then once you get back to the cloud, once you get back to your default layout, then you can receive all that stuff that you took and borrowed and stole from the channel bar. So that's how I teach people to use the channel bar. Find the things they like first and then bring them back into their wheelhouse here of the default layout. So let's take a look at a market recap. We're coming off a big 3-day weekend in a market that just cannot be stopped. And as we look at this here, we see more of the same. We had maybe 2 or 3 days of sideways action pause last week, Thursday, Friday, and then a push back through new highs once again. And as we always say, look left. In this case, there's nothing to see on the left-hand side. There is no more resistance. We are sailing here through into blue skies. All-time highs in the SPY, in the NASDAQ, or the QQQ ETF. Same type of scenario. 1 day of rest last week, a new high on Friday, and a new high today after the 3-day weekend. The Dow, which was also showing some nice leadership, is continuing to move higher to new highs again today after a little bit of congestion and a pullback. But one of the things we focused on the last 2 weeks was how the IWM, which is another word for the Russell 2000, which is going to be your big index chocked full of small cap stocks that are not really on the radar, but nonetheless are public and trading. Well, what we noticed is as the SPYs and Qs and diamonds were breaking out and moving to new highs, the IWM was staying range bound and even flirting with breaking down. Well, it's popped back out a couple of days below this prior high, and now we had 1 pop-up day, 2, we had a day that traded below, but most importantly, closed above. So we've got 1, 2, 3 days of closing back above that orange line, and then today, what do you know? We just took off. So what I would be doing if I were you guys is I would really be trying to give some stronger weight consideration, or really take a second look on your watch list this week, because you may see some rotation where the smaller cap stocks really start moving because their parent ETF here, the IWM, has basically broken out just a hair and maybe on the move. So if the IWM is showing some strength tomorrow, making new highs, could be a good day for some small cap stocks going forward. But you know, these are unusual times. There's not very many moments in time when you guys can say you're participating in all-time highs with no resistance above to see. So essentially this market is, you know, it's in a musical chairs mode. It's basically waiting for the music to stop and some short-term profit taking to begin. And when that short-term profit taking begins, well, then we can start to maybe look at the levels of support. This level right here in the SPY could become future support. In the Qs, even though that's a big fallback, I do see a gap right here I could highlight. I'll highlight that gap. That could be a possible area for a pullback in the Qs. The diamonds could also have a possible pullback, you know, maybe to this level right here, or maybe even farther below. Who knows? But at some point, you know, since we don't have any resistance up there, we're just waiting for the market to run out of steam and have the musical chairs game start. But until that happens, it looks like IWM might be a laggard breaking out today. So keep an eye on your small cap stocks tomorrow and this week if that stays the same. You want to add anything, Andy?
You know what? There's really not a whole lot to add, Steve. I mean, it's just a like you saad last time, the train has definitely left the station, and now it's 3/4 of the way across the country. You just look at that move, just freeze right there on the spiders, and just look, since the election, back there in November, the kind of move, there's basically, gosh, almost 50 points there in the spiders alone.
Actually, no. Here's the election down here, basically.
Right.
So 208 to 30 points,
Yep.
maybe 29 or so.
208, 40 points. Okay. Yeah. Well, yeah. Anyway, regardless, it's a big move. I mean, I don't know what else to say, man. It's just, yeah, I think Steve hit the nail on the head when he mentioned something about, yeah, you don't very few times you see a market at all-time highs with the no resistance, and yeah, this is definitely, I get the feelings of a euphoric stage, but yet you don't want to jump in front of that train and then short it. I think we mentioned last week, this is a time, and I think we're going to kind of hit on that going forward. This is a time where you can really catch some what we sometimes refer to as junk stocks and stocks that really haven't done anything, that are playing some catch up, and this is the type of market where I like to do that type of trading.
Yeah.
Instead of chasing the ones higher that's just getting carried away.
Yeah. Okay. All right. So let's zoom out of that. That's our market recap for the moment. I think what's on tap next is just to take a look at the where do we go here? AI recap. Here we go. Okay. Holly had a few trades today, and had a few interesting ones. I want to focus on early on. There was a couple that came through here. 6:40 is my West Coast time here. This would be 9:40. So 10 minutes after the open, we had a couple of trades come out. This one got closed out by Holly on a stop loss 3 minutes later. This one got stopped out on a Holly stop loss 1 minute later. So you guys, if you don't realize it, I'll tell you, I'll give you a big reminder. The first 15 minutes of the market is volatile, to say the least. That's where all the craziness really does occur. It's where a lot of some of the big Momo names also gets some movement going, but maybe not without a little bit of extra volatility in the first 15 minutes of the market. So basically what happened here, if we scroll down to the bottom, it looks like in risk-on mode today, basically letting all the trades go till the end of the day, which is what risk-on means, in case you're wondering. This column right here is the risk-on column. The risk-off column barely had a rough start, but basically trending back and got positive towards the end of the day. The risk-off column is essentially everything included in this column. So that the 50 cents, the 25-cent loser here and here, quickly went towards the early morning risk-off column. We had a few more that also went off. Here's one at 7 o'clock, lost 10 cents. But what I want to show you is there's two sides to look at this, these two columns here. The downside is on the risk-off column, Holly is never going to take a giant loss. The biggest loss here looks like 31 cents taken, and that stock actually continued to go down $1.05, which is continued to calculate in the risk-on, I might add. So Holly demonstrating great risk management down here on these two trades. Let's just double click on that one on the open. A lot of volatility for sure on the open. So if you're not a fan of volatility, maybe avoiding the first 15, 20 minutes of each day is probably the order of the day. Here's another one, reduced risk, 10 cents was the loss, but the continued stock moved down way beyond the suggested stop, which was essentially, I'll highlight that for you on the charts here, guys. Whenever you right-click on a Holly trade, we get the entry in the blue and we get the stop in the red. So there was basically our band, and it wasn't really ever profitable. Holly took 10 cents and the trade never really got back above that level. But what it did is it had a $1.35 loss. And these are the kind of things down here, taking big losses, that makes it difficult to stick around in this game. So even on the bad trades, Holly is always demonstrating a decent level of risk management for y'all. All right, now let's go back to the top here. Same thing happened. As I said, in the first 15 minutes, we had a couple of 25-cent stop outs. Well, let's take a look here. I'm going to open this up a little bit. It's on a 15-minute chart, but you can see the wick spiking up and then back down. Here is our stop level right there. I'll mark that up on the red. So essentially, the trade went through, was positive, and then pulled back, and it looks like our exit reason was a stop hit. 25%, 25 cents, excuse me, is the most that the smart stop is going to allow on the strategy, capturing the alpha trend, excuse me. We go back to our parent window here real quick. Capturing alpha trend, smart stop is what they use to get us out. So the smart stop is calculated on a trade-by-trade basis because every stock is different. RBA and LL both basically came out with the same stop. But you've heard us use the word trade around. What does trade around mean? It means keeping an eye on an early call. See, the beauty of Holly is even though there was a little bit of volatility and wicking back and forth on a stop out, the statistical probabilities are good at that price all day long. That's still the same trade. So let's break this down again. I mean, basically Holly stopped out. And the first thing I like to do, and Andy will remind everybody else as well, is what does the daily chart look like? I'm more concerned of the daily chart than I am of the stock that just gapped open. Well, where did it gap from? Well, it looks like it gapped up from a really nice base low. And once it cleared these levels right here, as we're always looking on the daily chart, that's essentially where we were. So we had cleared some really nice resistance. That gives me the bigger picture. Could be an interesting trade. But the problem was there was too much volatility on the open. So what we say is, now if you have price alerts, the price alerts are the Trade Ideas Premium feature. I would just line right up there with that entry point, right click, and select Create Price Alert. And this is, I would call this a trade around. So what that means is if the price got back above that level, which it did, I'm going to zoom in for you guys, right here. Let's just really zoom in here. Basically, as it got back above right here at this point, we would have been alerted again. Here's the arrow on the in, and then the out, and then a little bit of a tiny 15-minute candle, but then the next candle popped it. Now, maybe you missed it. But here, this is a level of interest. Not only did it pop through, it pulled back and did this thing I'm always talking about. Prior resistance becomes future support. So it actually gave a secondary opportunity to really monitor this level, this blue tag level as we'll call it. So there was an opportunity for secondary entry to have a really nice movement for the rest of the day on that particular one, RBA. And the second one, which is also very similar, is let's take a look at the daily chart. Okay. So on the daily chart, we cleared this level down here for the most part, and we got our entrance right about here. So we still had these levels to contend with, so it wasn't really a no-brainer for the most part. Let me back up a little bit. Okay. So here is essentially what you guys have heard me call the horseshoe. A horseshoe alert is something that gaps up, comes back in, and then trades back through new highs. Well, what happened on this one was this particular candle. If I zoom in on it, hang on. Why can't I zoom in on that? There we go. This particular candle right here, hang on a second. There we go. Just wanted to get my parameters in there. Okay, here was the stop. Again, a nice, close, tight stop, but this was our candle. So we actually went up and back down in the same candle. We're on a 5-minute candle here, excuse me. I thought I was on 15. So 5, 10, 15 minutes into the open, runs up, triggers the stock, and pulls back and actually triggers the stop loss. But again, looking at that daily chart, we had a really nice gap up above resistance. This would be the kind of thing I would want to keep an eye on. So we want to set our price alerts going forward on anything that's of any interest for you guys and call it a trade around. Now, I know not everybody has the price alerts in their feature or the subscription. Maybe some of you have the standard feature. There's nothing that can prevent you from just using your own broker or freestockcharts.com. There's a lot of services out there, but I'd start with your broker, which can give you what you call a price alert or a signal alert, where you can do the same thing and get some sort of a bell to go off as Holly travels back through the original entry point where there was too much volatility 10 minutes after the open. I got a couple more I want to add. Is there anything you wanted to chime in on that I've talked about so far?
No, you're doing a really good job. I will say, yeah, the part about looking left, guys, and taking a look at the daily. I know a lot of time we're showing you the 5 and 15-minute chart in there, but boy, the daily shows the true footprints in the sand. And I reiterate this all the time when I'm having sessions with people, because constantly fighting about with the 5 and 1 minute time frames. I'm saying, listen, keep an eye on the daily. That's going to show you the true action. And look at that LL, and once it broke through those two little wicks up there, and had a nice little run almost to 19. And the same can be said for the other one too that you showed, Steve.
I'll go back to that one. But before I go to this one, for anybody who's curious why this was such an interesting daily chart, what did we have? We had 1, 2, 3, 4, 5 down days, 5 consecutive down days, and then a giant gap in the opposite direction. There's a name for that. It's called the pro gap. If you guys have never heard of that, it's a way that it's called the pro gap for whatever reason. But usually we see gaps going in the same direction as 1, 2, 3 days up, and then a big gap. That'd be a continuation gap. Well, this was a neck snapping head fake gap, more than likely, and yes, there it is. It's an earnings play. Here's our earnings, essentially for the most part. So anytime you have a direction of 4 or 5 days going down and then a neck snapping reversal gap, that's called a pro gap. And many times a lot of people like to give a lot more weighting and consideration to a stock that pro gapped up on everybody else that had the direction going in the opposite direction. So that's what was interesting to me as well on that first one. There was another couple that I thought might be worth at least taking a second look at. PMCI, I really liked this one, looking at speaking of the look left, okay. Here's our intraday, and a couple things. This is called quarterback. The reason it's called quarterback is it's basically a 25% pullback of a stock that's breaking out and moving. So here's our stock breaking out and moving right here, and then here's our red candle, 25% pullback. You see the blue tag right there, right on that orange line. You see the arrow lining up. Here is a nice entry. I love pullback entries, especially on stocks that look good on the daily. Well, what does this look like on the daily? Well, let's zoom in. At our blue tag special here, it had just so happened to clear that high from 4 or 5 days ago. This would be the kind of thing that people say, well, it seems like Holly only generates ideas for day trading. Well, if you're a swing trader and you've got some hours behind you on reading charts, there's nothing not to like about this particular PCMI chart that we never would have seen otherwise if it weren't for the AI bringing that to our attention. I liked that one. There was one more example, SND, and then we can move on. SND. Let's take a look on the bigger picture. Not quite the breakout back here, however. Yes, thank you, Dan. LA was a pro gap earnings. That would explain the dramatic change in direction. 1, 2, 3, going back 4 days, and actually just the high of yesterday. Essentially, that's right where the blue tag came out. So focusing on the recent few days, we had a nice breakout above recent resistance, but we still had some stuff to deal with back here as well. So nonetheless, I just really want to get you guys conditioned when these things come out to take a look at the charts, and most importantly the daily chart, and see exactly what the bigger picture is. This particular stock only managed to do 8 cents because it was called a profit save. So here's the movement moving higher, and then a pullback. Holly says, I'm not going to allow something that was positive to go negative on me, which it did. And so that worked, but towards the end of the day, we broke back up above again. Here's our trigger level, broke back up above, and then going into the day, for people that like narrow ranges, my oh my, that's quite the narrow range to maybe keep an eye on going into the close. And obviously the close and the volume down here as well really, really finished off the day nicely there. So, there's a lot to be gleaned from Holly. She's the unemotional, statistically perfect robot. She felt that today was the day to make about 16 or 17 trades, and it looks for the most part those were long trades. A couple of shorts were tried. That one made 7 cents, and this one gave a few back. So, directional bias once again kind of shows the picture as well. For those of you who are newer, I'll just end with this. If we've got like a blank open position and it's 10 o'clock East Coast time, and all of a sudden 4 or 5 shorts pop out here really quickly, and there's no longs, that can be a directional bias. Keep an eye on that, because at some point in this market that's going to happen. And I'm really hoping that Holly is on her game and kind of gives us an early warning shift as to when the strategies are going to start migrating towards the shorts again. But if you ever see a blank screen of open positions and a handful of longs come out, well, chances are the market's about ready to creep higher and go long. If you ever see a bunch of shorts all come out at once, keep an eye on that market, because we could see the SPYs and the Qs start to roll over as things are popping underneath the seams, under the scenes, under the water, the bigger picture of the indexes, and sometimes they do follow suit. I've seen that many times. So that's how we like to use Holly. It's just another statistically probable alert to give us ideas. And what you can do on this main window, if you're not aware, is you can bring in the columns, right-click, and edit your columns. Bring in win percentage, bring in profit factor, and you can see that these are the actual scores coming into today that the strategies did last night in a complete back test of our artificial intelligence process on the back end. All right.
Let me add something. Yeah, let me add something to that, Steve. And then one of the reasons you guys, I know you guys could question us. Well, you know, you guys are talking about trade arounds. Why do we do that? Why do we constantly talk about trading rounds? Because why not? Well, you could have done this, you should have done this, and got back in the trade. You know, no, there's much more to this than this, because these are strategies that have been back tested. They have been optimized over and over and over again, and that's why we say, you know, keep an eye on them. And if you have price alerts with our premium version, or like Steve said, maybe your execution platform has it, just mark them up. Even if you have to re-enter the trade, in other words, you got in, you got stopped out for a small loser with Holly. Hey, Holly. Mark it up, Hottie. Mark it up, and then wait. If it triggers, hey, maybe give it another shot, because you know, it's the statistics are in your favor with these trades.
All day long at the same entry point. Yes, exactly. Thank you. Okay, let's move forward. You know, Holly will give out short stocks, obviously. Some of them may be more hard to borrow than others. That can always be an indication, no matter where you're getting your setups or your indicators or your alerts. That's going to be, you know, between you and your broker for sure. Okay, to answer that quick question that came in. All right, trade of the week. Trade of the week. JSO. I wish every trade of the week would do exactly what JSO did today. Basically gave us about 7%. All right, so that's the good news. That's the after the fact news. Let's talk about how we found JSO using Trade Ideas technology. For those of you that tune in frequently, we like to find stocks that are trying to break down trends and start to go back into accumulation mode after a nice base. Now, doing that, hang on one second. Let me just make sure that I don't have any surprises here. Hang on. Okay. We try to find stocks from the trend change lubricant or the trend change type of scenario that look like they're beaten up but digging in, basing, and then turning back up and breaking the downtrend. Well, JSO definitely broke that downtrend today. There's a couple different places we find these trades. Now, on the main one that I have where I really try to focus on short float, we found SPWR over the weekend. This was kind of the first indication that we were interested in maybe something along these lines. Well, Friday, they got some good news. They had their earnings, and they had just a boom, a big day, closing on highs on Friday. And SunPower was on the short list for trade of the week for follow-through, and it did. It followed through today. It's also got 44% short the float. But what it also has is a couple of ugly negative earnings type of metrics. The fundamentals really aren't there. But we started to notice a few other things popping up that were also part of the solar family. Well, this one right here is very similar to the trend change lubricant, except there is no real major short float scan that I'm looking for. And I'll give Barry credit. I basically got this one from Barry, and it's still looking for the same thing, stocks that are basing and turning up and trying to break down out of the right downtrends. We just don't have that short float factor. Well, one of the first things I noticed near the top, and the reason I sorted this one the way I did is I sorted by earnings date, so we could get 17 days, 15 days. So JSO does not have earnings for another 15 days, and that's really what we want to try and have is a little bit of breadth, a little bit of lead time to try and let these trades work before the decision has to be made to gamble and go into earnings. And on JSO, we looked at the fundamentals here and thought, oh boy, this is a little bit better. This company's actually making money and has the earnings way far down, 15 days away. Very interesting. So we started to see a pattern. And sure enough, wouldn't you guys know it, today, of all things, TAN, out of all the ETFs I follow, UNG, gold miners got beat up, the biotechs got beat up, silver, treasuries. Look at what was at the top end of this list today, solars, TAN, solar. How about that? Let me just double click on that because I want you to see this chart as well. Interesting looking chart. We just kind of broke back above some resistance that we've had. So this did not happen over the weekend. We had to kind of figure this out on our own over the weekend. We had the short list of SunPower and then JSO. I'm going to show you another one that's also on this list here, coup. It's more of a newer issue. And there it is right there, coup. But let's imprint on, once again, what we're looking for. Okay, here's a new issue. So basically it opened up on this day, traded up, and then everybody sold out of their IPOs, bounced, and then it kind of did that thing I was talking about last week where what was called the spring. For those of you that remember, good on you. For those of you that don't, basically this is our floor down here, and we had a little bit of a time below that floor, then we popped right back up, and then that floor established itself. Nice sideways trading action, and then Friday close, had a nice pop, and some decent follow-through. So we were looking at this one as well. So that one also made the short list. So I just wanted you to see some of the stocks that actually did make the short list and why we went, we usually kind of curate the stuff we're getting off of our technology, pass it around on the weekend, and kind of get a consensus. And I think we agreed that JSO was probably the one we wanted to go with, even though coup would have worked nicely. But it's a new issue, and I believe it has earnings. It's got earnings in 14 days, so not real bad there either. So that's the reason for JSO. I want to highlight one more thing, because if JSO has any decent follow through tomorrow, let's look left, guys, on the daily chart. Support at 567. Support at 567. And then dropped down through it. And then bounced back up to it, and then it became resistance at 567. So here's our next target pivot level. I would say if we get lucky enough to get to this target level sometime this week, probably a good idea to maybe take some off, a third, a quarter, maybe even a half if you really want to lock in a nice 10 or 11% trade. But in the bigger picture, we're really hoping, for maybe more up around $8, as time goes on. I love to pull up CWEI. This is the poster child down here for a trade of the week as it broke out of this base on 56% short. And the short squeeze just has not stopped even to this day, even after they were acquired. So this is the kind of stuff we're looking for longer term. That's why we focus on these things that are, basing, throwing in head fake bottoms, and then moving back up to highs. So that's the theory on JSO. We're going to stick with it. Could you share your ETF list, please? Well, I'll tell you what I'll do. What has happened in the solar sector to have such highs in general? Probably just oversold, Patty. Also, going back to the IWM, a lot of these are small cap stocks. IWM's breaking out, and SPWR on its own had a really nice news. They had some contract news that they picked up last week, so that's probably one of the reasons. And they're oversold. So, and I'm glad you brought that up because that does remind me, again, we're in kind of a low cap type of stock here, and if we get any follow through in the IWM, we could see some nice follow through in those stocks. Where was I going? Oh, could you email your ETF list, please? Yeah, what I'll do, guys, is I'll drop that into the chat window now before I get distracted. So all you got to do on your trade ideas is start at the toolbar, go to external linking, and oops, I'm sorry, go to symbol lists, create new list, go ahead and call it ETF, and then once you've called it ETF, you'll get the screen open where you drop in the symbols. Well, here's our symbols right here. So what I'm just going to do is I'm going to scrape from the top and pop this into, let me try that again, into the chat window. and then it's up to you guys to create a symbol list and call it ETFs, and then you can drop it into a high or a low. And chat window is opening up now. It's on your GoToWebinar toolbar there. Just click the plus symbol next to the chat window, and I just emptied about 29 or 30 ETFs in there for you all. To take it one step further, just so you know how I'm doing it, I've got one as a top list, and I've got one as an alert. So the alert shows me in real time, hey, SMHs looks like they went out strong. Semiconductors closed on highs. Yes, they did. They were moving on highs. So as an individual sector, it was making a new high. But in the bigger picture, I use the T window, the top list window, and essentially just sort by change from the close. It would make no sense to short relative volume. I want to know what's the strongest to the weakest. And so today, solar, TAN, steel, SLX, XHB, home builders, it's up to you guys to learn these things. And it can give you a much better helicopter view of where the strength and weakness is on a sector basis as they move higher as a complete sector up and down the list. So that's how I'm using my sector windows, one of each. All right, before I forgot, Weight Watchers is the trade of the week from last week. However, we've got something we've got to pay attention to, and that is the fact that earnings are coming up in 5 trading days. So earnings are going to be midweek next week, maybe Tuesday, I'm not sure, but we're running out of time. Let's take a look at what we got. Well, what we've got is kind of an ascending triangle here, and this trend line has started to develop since the trade of the week was called out. Additionally, the trade of the week had a lot of support down here at this, where is the level? I need to go back even farther. There it is. These levels down here, just above 12, 12, 15, you can see 1, 2, 3, 4, 5, and then a dip below that. So we'll call it like 12, 14 for the most part. That's the level that should be holding, and here it is right there. Look how it corresponded to my daily chart. All those wicks seem to have found support at that level. But now we're going out on the fulcrum. We're inching out on the branch of the tree here. Last thing we want to see is the price level break this trend line. So as it is now, the current stop is down here, I think around 1150. We're going to move that up. We're going to move that up because this level has been showing itself as tremendous support while the trade has been open, and this trend line is showing us that we're kind of leaning out on the branch a bit. Once a trend line like this breaks, I don't want any part of it. I mean, it's much more significant, really, than a horizontal line breaking, because a lot of times those horizontal lines, it's very easy for everybody to see. They'll pop down and pop right back up. But once a trend line breaks, especially closes below that trend line, kind of all bets are off. So we're kind of in caution mode here. We've only got 5 days left for this thing to move back higher. And again, one of the reasons we really like it, the short float is up around 80%. But the problem is the price action might make people wait to go into earnings before it gets the move that it maybe deserves. And if it doesn't, hey, I don't like taking trades into earnings. It always seems like I always got the wrong side of the coin when I did that. So it taught me early on this only focus on the things that you can control. And you guys can't control how earnings come out, nor can you control how the price action reacts to earnings. You might see great earnings in a stock and wonder why is it down 10% after hours? Well, because the reaction. Basically, everybody was looking for perfection, and the stock was priced to perfection, as they call it. So if you're still in Weight Watchers and you're looking for some guidance, I would not want to see this trend line broken. This becomes the yellow zone in here, and anything below this 12-14 level becomes our new stop out. So I just wanted to give you guys an update on some risk management, and hopefully that resonates with some of the things I'm showing you there. Want to add anything to the trade of the week, Andy? You're on mute, probably.
No, it takes me forever to get my mute button off. No, I think you covered it. I think you covered it really well, Steve. It really did. Yep.
All right. So there's our trade of the week. I've got a couple setups I'll show you. There's only 4 of them, but I want to spend maybe 10 minutes before I get to that on something that not a lot of people maybe either are aware of or know how to use, and that is the Trade Ideas web version. Okay. Since 2002, Trade Ideas has been a downloadable version. About a year and a half ago, or maybe even less, a year ago, the web version started to take shape. And it's getting better and better all the time. And I wanted to show you guys how you can access the web version. Now notice that I've got a good green connection here. At some point, once I log into the web version, after maybe half a minute or so, this is going to turn red. So the idea is you can't be in both at the same time. So to get to the web version, you basically go to our website, tradeideas.com, and you've got a button here that says Launch TI Web. All right, so it's one click of the button. There's my login, and I'm good. Look at that. We've got the same green status bar here on the web version. Now, what I want to highlight your attention is a little bit different. We have what we call a container window for our channel bar. You'll see as I manipulate this thing in and out, it's containing all of the windows that the web version opens up to. And it's essentially, right here on the moment on social media. Well, I could click over to pre-market, and now we're seeing our channel bar show up with the pre-market ideas. Now, if there is something that you like that you see here, the old way to do it used to be to right-click and save to the cloud. But if we wanted to say, for instance, grab this guy right here, this UpGappers, we need to, how do we do that, Andy? We need to go to...
you got to pop it out. You got to pop it out first.
You got to right-click, configure, and pop out. Pop out is the operative word. Boom. There we go. There's the strategy that's pre-configured. If we didn't make any changes, we don't need to. We just click OK and load it. And look what we got now. Now we've got a working version of the alert that we took from the pre-market. Well, maybe there's something we like on Surge. Let's go ahead and go over Surge. Instantaneous volume surge. Somebody asked, why would you go to the web version? Well, some people like a web version versus a download version. Some people are using Mac, and if they've just got a basic standard Trade Ideas subscription, this can work for Mac users as well. Those are the first two that come to mind. So if we wanted to pop this guy out here, let's pop him out, configure and pop out, launch that window as it is, and now we've got a working second window. So if you'll notice, if I go to my options channel, it's kind of like we pinned these windows, but there's no more pin feature. They basically just stay there. And so if you want to use the channel bar, you're going to have to basically use it in the confinement of this frame right here. Now, what if I wanted to add some things that I already have from the cloud? Well, we can do that too. We can go to Tools, Load from Cloud. And let's see the top two that I have in my cloud as we wait. Okay, the first one is the Squeeze Me Alert, which is a T window top list. Let's load that. Okay, now we've got the Squeeze Me window that I have shown many times, which looks for high short float and high short squeezes above a 52-week high. And maybe I want to grab one more. Maybe I want to grab another alert window that I have in my cloud. So we'll just go Load from Cloud. And I think Bouncers is in there. So let's grab Bouncers, which is also an alert window. Highlight, click Load. And here it comes. There it is. All right. Well, this one, interesting. It's got a lot of information in that description window. Well, if you don't want to have the description reading exactly what everything's going on, which a lot of people don't, let's get rid of that. We'll just go to Configure. We'll go to our Columns tab and locate Description and pull that out of our Description column, remove that column. And once we click OK, it'll clean this one up a little bit and give us a nice tighter window.
And while he's doing that, I'll also answer your question or add on to his answer, I should say, about why you might want to use a web version. I've done some session with a lot of people who like to have it running during work and they be behind a firewall. Yeah, so obviously a web browser is a lot easier to access than downloading a product, and they have trouble. And not only that, their office can see sometimes what they're downloading. So, yeah, web version can come in really handy if you're using it at work.
Yeah, and the way it opens up is as we saw with just our basic channel bar. And this is the easiest way to just get started, just looking on the channels and finding out what's going on. Now, if you're somebody who already has everything you want and you know what you want, and you just want to load stuff from the cloud, you don't have to have the channel bar on. We can just delete it by clicking the X right there, and you've got some more workspace to work with. But if you ever do wanted to bring that back, new channel bar, it's going to kind of do the same thing. It's going to open up right there, and as you can see, it's just a brief outline of the container window. So once I go into a social media channel, for instance, that container window will be populated. And if I shrink down the container window to try and make some space, well, everything will automatically resize for you as well. So that's kind of the big difference on the web version, is how this channel bar has this open container window. And if I wanted to really see some big windows, the problem is, if you guys are wondering, hey, where'd my other window go? The problem is the channel bar will overwrite and cover over your other windows. So that's why it's kind of a good mixture of using the two going forward. And again, if you don't want to use the channel bar, you don't have to. You can take it off. But anything that's in your cloud account with your regular Trade Ideas account, and please notice, look at my downloadable version. It's gone red on me. Nothing's going to work. You cannot be logged in on the same account on the web version and the download version. If I wanted to, if you were somebody who were saying, oh my God, my Trade Ideas is broken, the first thing you guys are always going to want to do before coming in and asking for help is just click on the account, and you'll see, here it is, another user connected under my username. So that tells you why I've got that red ball. It might say bad username, it might say bad password, but that's the first place you guys are always going to want to start, just to see what your connection says. All right. So with that said, there's some real basics on the download. In the future, is there going to be a download version for Mac computers? Rodney, not necessarily. That would require going back and creating a whole new foundation. And so this essentially is going to be the workaround for that. You'll have two choices. You can use the download version using a crossover like CodeWeavers or some sort of emulator or parallel, or you can just come in and use the web version. One thing before we leave the web version that is now active, if anybody really likes to use the back tester, the back testing strategy is now available also for the premium users. If you're a standard user, you also get back testing, but you're only going to get 10 simulate buys or 10 simulate sells. Well, that's default, and I'll tell you, if you need another 20 or 25, you can always write us in, and we're happy to let you guys play with it and explore it, but it probably would require a request to add a few more back tests to you if you're on the standard subscription. But for those of you on the premium subscription, the back testing module is now available to use as well on any alert window inside of the web version. So that's a new feature as well. All right, if I wanted to save this as my layout, I could do so under Tools, I believe. And we would say, hang on a second. We would say save as default layout. And you'll notice that cloud icon, it's going to save everything to the cloud. So we're no longer saving anything to your machine on the web version. It's all being saved in the cloud for you. All right. Thanks for letting me go through that. That was kind of a request that some people wanted to know more about. So I'm going to click out of there, which is another way to log out. And right here, how to get this thing going again? Well, account, reset connection, and we're back in business. All right. So before I turn it over to Scott or anything else Andy wants to add, I've got a couple of alerts I want to set. Sometimes at the end of these webinars, we'll set some alerts and some ideas. If you have Trade Ideas price alerts, which is the premium subscription, I'll create a cloud link for the 4 that I am going to set here. I'm going to start with this one, washout bounce. All right, you guys maybe have heard me talk about washout bounce, and I love this one because it's scanning for a hammer on the daily chart. Well, we got ourselves kind of a long hammer with a big body for sure, but it's the only one that came through today. I want to take just a second and explain to you exactly what this scan is looking for. We need to go back even on a 5-minute chart. Screw it. Let's just stay on a 5-minute chart. Notice what happened on the open here. Tuesday, here's Friday's close. A nice big volume candle at Friday's close. We open up here today, and the price jams all the way down below $59 and all the way back up in a 5-minute candle. Now, you tell me if you think humans are doing that, and I'll just answer it for you. No, they're not. This is the fingerprints, footprints, and the hallmark of what HFT and algorithms do to our markets occasionally. It all happens in the first candle. I mean, I was even going to go to a 15-minute chart and show you the same thing. Down and up, just like that. So what's happening here? Let's go back to the daily chart. Daily chart looks like a really nice chart. Up, gapped up, barely filled the gap, back up. It's been going sideways for 2 weeks. Well, everybody that's been waiting for the breakout probably didn't anticipate they're going to get a shakeout first. And that shakeout occurred today. Right below this candle right here is probably where everybody said, I'm going to put my stop below this candle right here. What does that do? It's always in the first 15 minutes, 10 minutes, even 5 minutes. The algorithms create a negative feedback loop, and trust me when I say this, they know where your stop orders are. You can ask your broker if they're selling your stop orders, and I believe they are. And so the big empire back there, Citadel and the other internalizers that Schwab and E-Trade and Ameritrade all sell their order flow to, and in my opinion also we're going to sell your stop orders to, there becomes a moment where those algorithms can calculate running those stops and buying it back basically shakes the weak hands out. And after I see a candle like that on the daily chart that looks this good, chances are that was a shakeout of the weak hands. We may want to move higher. So in all simplicity, all I'm going to do is just mark up the high of the candle today, which looks like it was 60.88. We'll just mark that up right there. Oops, I'm sorry, create price alert. This was on the washout bounce, looking for a couple days maybe down the road of continuation higher once all of these people got shaken out by the stop hunt that the algorithms love to do. Washout bounce. Okay, we'll just leave it at that. That's all I need to know. Okay, so there's our alert set in the washout bounce. Ideally, this thing can trade higher above that high going back there, but that long tail signifies to me the weak hands were shaken out. Let's use their misfortune as our opportunity, shall we? Okay. Yeah, David. David's asking me about sharing an alert. I can do that. I'm going to share some other stuff. So if there's any scans on here that you guys see that you want, just go ahead and email me directly, steve@trade-ideas.com. I will be happy to take a few moments and send you guys the cloud links to the stuff you're looking for. All right, so that's one. Okay, let's go back to a nice short squeeze opportunity. Sears Holdings. Kind of like the trend change lubricant. This thing has a wicked 71% short the float, but it's got earnings in 6 days. That doesn't mean that what it did today might not have any follow through. Look at this beautiful wick, downside wick on the daily and push back up and close near highs. Well, I basically set this alert already today. It's in my price alerts, but I'll set it again for some follow through above today's high, which is 814. So let's go 815. And create price alert. This is 71% short. Oh, and also only 22 million in the float, a very low float. So I like to know that as well. Those notes can actually really help me when the trigger goes off. It can remind me what I was thinking here in a calm, relaxed, Zen state of mind. Looks like that one may have triggered after market. Let's take a look. So since it triggered like that, chances are we've got to have to go to properties of our charts. I'm going to have to go back to my 15-minute chart, properties, show post-market, and let's take a look. Oh, barely. All right, so we're going to have to go. Let's delete that price alert and set it for 1 penny higher. So where was my price alerts? There they are. Jeez. Let's go ahead. Let's delete Shield since I've already triggered that one. And let's delete the other one that I just created, SHLD. And let's go a penny higher. That was at 815. Well, aftermarket's telling us we got to go to 816 because I want this alert to trigger in real time tomorrow. And 22 million float. Okay. All right, there's our second one. Let's turn off post-market because I don't like that. Urban, as Andy likes to call it, urban outfielders, not urban outfitters. And this one also triggered. So let's just go a penny above the high here today and reset it. This one has 15% short the float. It was also found off of my trend change because of the 16% roughly short float earnings in 10 days. And essentially the high of today is 27.86. Let's go 27.87 and set a price alert. And 16% short the float is all I need to know on that one. And again, this is why I'm liking this, guys. A big base, moving higher, didn't pull back much, going sideways along this level of interest. Why is it a level of interest? Because the top of that wick there and the top of that wick there basically kissed it today. So anything above there may have some follow through. And the last one is Zoes, and I really got to caution you on this one. Earnings date is 2.5 days away, so this one needs to do something quick. But it's short, 36% short on only 19 million float. I will keep an eye on that any day, especially after it came up here and just went sideways, roughly at these levels right here, 23.67. We got 36% short on 19, was I said, million float. So there's 4 ideas that can be triggered in real time tomorrow. If we go back to the price alerts and take a look at them, let's go and sort by created date. And there they are, ZOES, URBN, SHIELD, and SLGN. Those are the 4 that I just created. So let's go ahead and highlight these 4. And I'm going to do what I did a minute ago. I'm going to share, like I did with my symbol list. I'm going to share those selected alerts and copy all. So if anybody also has the price alert premium feature, if you go into the chat window right now, I just sent in a cloud link. That cloud link, if you load it from your cloud, is just going to merge the 4 stocks that we just set up for a working alert to be triggered hopefully tomorrow or the next day this week. And if those alerts go off, more power to you. Decide if it's something you want to jump in and trade. If you don't have the trade ideas alerts, then hopefully you were writing those trigger points down, and you can also have your broker use your broker's tool to find out what's triggering if you don't have the premium. So that's all I got for you today. Anything else you want to add before we bring Scott in, Andy?
No, Steve. I think it's that time. Yeah,
that time. Let's bring it up. All right, Scott, come on in and say hi.
Hey, yeah, thank you. So just a reminder to everyone, the webinar will be recorded. They'll be recording up a little bit later on tonight. You get an email with a reminder of where to find that. So something new at Trade Ideas, we have a podcast now. We're putting out new episodes every Friday. So go ahead and check that out. Just search for Trade Ideas Podcast in your favorite podcast application, whether that's iTunes, your podcast app on your phone, Stitcher, TuneIn, iHeartRadio, Overcast. There's a whole bunch of different podcast applications. Just search for it. You'll find it, subscribe, and you can check out the archived files, and then we'll have a new one up on Friday. Looking forward to continuing to grow that, so go ahead and subscribe to that and listen to the new episodes every week. We do have a promotional code for you, a way to help you save some money. This takes 15% off your first month or year of Trade Ideas. And you can use this one for either premium or standard. Just use the code HOLLY all week, all caps, the way you see it there. And also there's a handy little PDF download in your handouts panel. If you go to webinar interface, just go ahead and click on the little plus sign next to where it says handouts. And you can download that PDF with this information you see on your screen here, as well as contact info. That includes the best email to reach us at, which is info@trade-ideas.com. You can also reach out to your host directly, Steve@TradeIdeas or Andy@TradeIdeas. Follow us on Facebook. Facebook.com/TradeIdeasPro is the location on Facebook. And if you like our page, you'll get updates that we don't broadcast elsewhere. So you can share those with your friends. You can follow Steve Gomez @TodayTrader on Twitter. We also have @TradeIdeas1 and @TradeIdeas, and as well as a few others like @QuantBot. And if you follow one, I'm sure that you'll see some of the other ones on there. So go ahead and like them all, follow them all, and we'll get the recording up later tonight. If you have any questions, just shoot us an email. And thanks everyone for attending. Thanks, Steve and Andy.
All right. Thanks, guys.
Thanks, everybody. Appreciate it.
Yeah, you all have a good one. There'll be an invite going out soon for tomorrow's webinar, which is the Q&A webinar. So looking forward to seeing you there. Thanks, guys.